Welcome back. I'm Pratap here. Today is 23rd September 2024. In this video, I'm going to analyze the performance of the high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community. So whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page to get access to the first lesson. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. And also please follow the training instructions mentioned at our Telegram channel. The message is already pinned at the Telegram channel. So if you follow the training instructions, definitely you will be a very, very good trader after completion of this course. Okay, now let's get into the analysis of the high liquidity zones generated in the previous report. Yesterday, we identified 10 high liquidity zones. That is on Friday end of the day data. We have identified 10 high liquidity zones. Unfortunately, we did not get any trades. And one trade narrowly we missed, or maybe you might have got a trade in 915 candle if you might have taken type 1 proximal entry. Otherwise, the type 2 proximal narrowly we missed the trade. But I will be explaining how I fine-tuned the zones. And also one zone is violated completely, and that is expected as per the lesson learned in lesson 16. When a zone will be violated, you already learned. So as per those concepts, we already identified the zone will be, the zone is violated. That also we will see. First, let me explain the burger paints, how we fine-tuned, how narrowly we missed the trade. Let me explain. This is a 75 minutes high liquidity supply zone. We have a rally, 3 base candles, and a drop candle. This 75 minute zone is fine-tuned with 15 minutes time frame. Here you have a rally base drop. So within this area, again fine-tuned with 5 minutes time frame, identified 2 order flows. This is the rally base drop with some hidden body. And this is rally base drop, the second one. And today morning prices came very near, but slightly we missed the trade. And moreover, it is on the 915 candle. Many of you might not have placed an order at 915 candle during the intraday. Or those who put the cash segment also narrowly, even after adding entry buffer, narrowly you might have missed. But those who have taken type 2 proximal entry in the cash segment at morning 915 candle, probably your trade might have been executed. Again, with some stop entry buffer you need to add here. But anyway, this is not practical scenario because risk management point of view. Otherwise, we would have got a very good profit because throughout the day, most of the time, till 11:30, the prices were continuously falling. After that, there was some recovery. But anyway, we missed this trade. This is what we have to understand. And the next one is SBI Life. And this is a daily zone. Rally 1, 2, 3, 4 and drop candle. This zone is not completely violated, but it has to be violated. Probably tomorrow it might be violated. It has 2 order flows. not fine-tuned properly. Let me show you. Let me go to the 75 minutes time frame. We have a drop based drop. This is an excellent 75 minutes. And also here also rally based drop. Both are looking excellent 75 minute zones. But if you go to the 15 minutes, here you don't be having any proper order flow. But here we identified a 15 minute zone, but I did not identify a proper 5 minute zone here. So in the 15 minutes time frame, look into this structure. See, this is a drop candle, again a drop candle, in between no base candle. See here, this is a rally candle, drop, in between no base candles. And also the order flow is also not really 1, 2, 3, 4, 5, 6, 7. All these are all medium size candles. So because of these reasons, I am not really comfortable with this price structure. And today, see, easily the zone is violated, this zone. And next here identified a 15 minutes, 15 minute zone. Sorry, this is 75 minute zone. There is no 15 here. And here identified a 15 minute zone. We have a drop. Here also, it's not compromised leg-in candle, this one. So this is looking like a base, just compromised. Just want to see in 5 minutes whether I can find any order flow. So with that intention, I have drawn this. But otherwise, all these are all base candles more than 7. But this is, let me say, the reason why I compromised, I just want to check in this area. Because why I want to check? Because all these 3 candles, they were within a narrow range. That's why I got an interest here. Because I got interest, I drawn the zone, just compromised with this leg-in. If there is a proper 5 minute structure, definitely we can plan. Because prices moved in a narrow range. That is a very good clue to find good order flow in this area. But unfortunately, in the 5 minutes time frame, look into the price structure. All these are all base candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 base candles. Such kind of zones will be violated easily. So this is the reason why I did not plan any trade. This has to be violated, but today maybe at the end of the market hours, prices reached here. Almost at the closing hour of the market. Probably tomorrow this zone will be violated. Complete zone might be violated unless institutions decide to create a new 15 minute supply zone here and again push the market down within this area. Then next retracement we can plan. But otherwise, as per today's analysis point of view, there are higher chances this zone will be violated. And the next one is a DLF. This is also completely the zone is violated, and we predicted the zone will be violated. This is a 75 minutes high liquidity supply zone. So 1, 2, 3, 4 and drop candle. This is identified by our software. And this I fine-tuned with 15 minutes time frame. So here a leg candle. You can say this is a ERC candle that way, but let me tell you, this is also a compromised leg-in. That is okay, because here we have a very nice base candle and a nice leg out candle. That is the situation. I am considering this as a ERC candle, and this needs to be fine tuned. So in the 5 minutes time frame, here there is no proper 5 minute structure. Below the zone there is a drop based drop, but we can't believe on these zones. And moreover, this is not outside the zone, and also it is not a fine tuned zone within this area. And these candles, rally candle, drop candle, in between no base candles. So it's not a good structure. See this entire flow, how this is a rally candle, base candle, base candle, base candle, base candle, base candle, base candle, medium size leg in base, 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 and maybe this leg out is also not good. Okay, some extent you may compromise and draw this zone, but all these base candles, they will be easily violated. The structure is not good. Here also the structure is not at all good. And moreover, here we have a rally and a drop. Of course, medium size candles only, both. But medium size rally, medium size drop, in between no base candles. Even if base candle, you have to combine these candles and draw a zone. Because this is a good leg out candle. But we want order flow within this high liquidity area. So today see what happened? Easily the zone is violated. Morning price went, maybe up to here it went and came down and then started moving up, and finally zone is violated. Okay, this is about DLF, and let us look into the remaining stocks. ZNFC already I explained, this is a daily high liquidity zone, and also it is supporting bullish trade setup for monthly income trade, MIT. Previously I have explained how I fine-tuned these zones. So we didn't get a trade opportunity today. Because it is bullish trade setup, started moving up before entering into this. Next one is Tata Communication. This is also a bullish trade setup, monthly income trade, Tata Communication also. Many times bullish trade setup, before entering into the zone, they will be started moving up. This was the candle came close to the zone, but still it is not good enough to take the trade. And next one is Nifty Financial Services. Nifty Financial Services also previously I explained how I fine-tuned this zone. We have an order flow already tested. That is the reason why we don't want to plan any trade in this, because it is a tested zone. Of course, huge rejection is there from this area, but prices went deep. Maybe when you see multiple rejections, maybe 2 or 3 times at the time, you can consider this is a trade based on the price rejections concept. But one rejection is already considered as a tested zone. Multiple rejections, maybe it is a zone having strong rejections, also might be acting as a high liquidity zone. Okay, time being, this is the one we didn't plan any trade, and also price also did not reach this fine-tuned tested area also. Next one is this is a daily zone. Sorry for my mistake, daily zone, not 125. Drop based drop is the daily. This is the one already tested. Next one is Godrej Consumer Products. This is also a daily zone. And this one also we already discussed how to fine-tune this zone. Here we have a fine-tuned area. We are planning a trade, but unfortunately prices did not get into this. Previous videos I already explained how we fine-tuned this zone. So that's why those high liquidity zones already discussed in the earlier. I am just ignoring that analysis. HCL Technologies. This is a rally 1, 2, 3, 4, 5 base candles, a drop candle. And this one is fine-tuned with 75 minutes time frame. Rally, base, drop, excellent 75-minute zone. But have you noticed, here I have drawn a zone. This is not a fine-tuned zone. This is the aggressive trade setup. The reason why I have drawn multiple testing from this zone, maybe it could be a high liquidity zone. When you go to the 5 minutes time frame, you get more clarity. You see multiple tests you will be seeing, but from 75 itself you see the rejection, sharp rejections. Strong order flow is there in this area. Next, this 75-minute zone is fine-tuned with 15 minutes time frame. Here you have a rally-based drop. This rally-based drop 15 minutes area, again fine-tuned with 5 minutes time frame. You have a drop, 2 base candles, and again a drop candle, drop-based drop. And also earlier, see, before entering into the zone, a sharp rejection. Maybe a strong order flow is there in this area. But here I have also seen a high liquidity zone, drop-based drop. Drop-based drop, see, after the zone is created, this is the first test. And again, second time came very close. Again, third test. And also you can consider rally-based drop, maybe to indicate there is already tested 2 times, and once it is very close, again third time, several times. It is picking the orders and then coming down. So maybe today also maybe we can plan a trade if prices, but unfortunately today prices did not enter into this zone and did not give us any trade opportunities. So this is the today's price action. So HCL Technologies did not give us any trade opportunity. SBI Life already we discussed, right? The first one is violated, second one probably tomorrow is going to be violated, already explained. Next one is Concur. Concur is also a daily high liquidity supply zone. Sorry, this is 75 minutes demand zone. 75 minutes demand zone. Rally 1, 2, 3, 4 base candles and again a rally candle. This 75 minute zone is fine tuned with 15 minutes time frame. In the 15 minutes time frame, I have a rally candle, 1, 2, 3, 4 base candles, and then a rally candle. Rally, base, rally. And also one more 15 minute zone here. See, this is a failed ERC candle. So, because prices were moving, you can consider failed ERC as a rally. And 1, 2, 3, 4 base candles and then a rally candle. Of course, this is the medium size leg candle, part of the base. And both these 15 minute zones are again fine tuned with 5 minutes time frame. First let us start with the bottom one. See, here you have a drop, 2 base candles and a rally candle. But is already tested, picked up the orders and again moved. And again we have a rally, base, rally. 2 base candle, third one is a medium size leg candle, can be part of the base, and then a rally candle. And this is also tested. But this is tested multiple times. See, this is the first time and 2 sharp rejections. This price action clue is an indication a strong order flow. That way, if anybody would have taken a second test, it could have been a very successful. And moreover, both are on the same trading session. This candle and this candle. Even the first candle. But first candle is the previous day. Because multiple times it is tested, even here also. 18th September. 18th September again multiple times. So that's why I am considering this could be like a high liquidity, could be. but previously it went very deep. But see here, now again they are starting. Maybe institutions added more order flow into this. Actually, it has to be violated. It went very deep, close to the, it is not pierced, but went close to the distal line. What is the distal line here? The value is 6788. The lowest, sorry, 6769.45. 6769.45. What is the low of this candle? 6770. So it did not reach the distal line. Just 1 rupee before that, started moving up. Again, next time, again it picked up. So that's why, because it is holding the prices, maybe this could be considered as a high liquidity. And also here also, we have a drop base rally. It's not a great leg out candle, but still why I am considering, because it is picked up the orders and again a move. Again you can consider drop base rally. LOTL scenarios generally happen in high liquidity areas, especially lower time frames. You see quite frequently. And again picked up the orders and moved up. Went somewhat deep, close to the distal line, but still why we are considering. See here again, just before the zone, again a sharp. Maybe you can consider this is a third test, because we are drawing a type 2 proximal. If you draw type 1 proximal, it is again tested the same zone. That's why based on this, this is considering still institutions might have added a lot of order flow. That's why again a sharp rejection and started moving up. So both these zones can be considered as a high liquidity zones, and those who can accept multi-testing and you want to try a trade, for them it is a suitable zones. But the third one is already tested once. See here the rejection, it is a test. Prices went up and again came down, picked up the orders and moved up. We never know how strong it is. Maybe it could be high liquidity, but that we know after multiple tests only we know. Or NeoStock software, if it is can find this zone as a high liquidity, then definitely next time itself we can plan the trade. But at present, by looking into the zone, we don't know it is a high liquidity or not. So we can't accept the second test. Multiple test, after multiple test, we may confirm. Maybe after 3 times it is tested, at least we can consider 80% this could be a high liquidity. That way, 80% level we can confirm, but not 100%. Because some zones will fail after 3 tests. That day our trades will be stopped out. But anyway, once you have confidence it could be a high liquidity. I am not saying it is a high liquidity. It could be a high liquidity by seeing multiple tests, some sharp rejections from the zones. That way we can consider if the risk is within our management level. So this is about Coforge. Burger Paint we already discussed. Narrowly we missed this trade. That is what I explained. Your 75-minute supply zone. And the DLF already we discussed. It is completely violated. We know the zone will be violated. And the last one is RBL Bank. This is again daily high liquidity supply zone. Here we have only one order flow here. Here we have a zone, 15-minute zone, but there is no proper 5-minute zone here. Here we have. Okay, anyway, let me explain. This is a rally, 2 base candles and a drop candle. This is what our software identified this. And this is fine-tuned with 15 minutes time frame. So rally, 2 base candles and a drop candle. This is a 15-minute zone. Another 15-minute zone, drop, base and medium size leg candle also can be part of the base, and then a drop candle. So that way we can consider. And go to the 5 minutes time frame. In the 5 minutes time frame, here you have an excellent rally, 2 base candles and a drop candle. Rally, 2 base candles and a drop candle. So here we have institutional order flow we identified. But here see the structure is not good for 5 minutes time point of view. So that's the reason why not comfortable, couldn't fine tune the zone here. And the recent price action also not really comfortable. And moreover prices here came out of the zone. And in case if you want to consider leg out, you need to compromise. Okay, this is a drop based drop. This one you can consider. But this is outside the zone. But not here. Not really comfortable here. That's why I didn't fine tune. But today prices came once and came down and again moved up. This is almost at the last hour of the trading session, this price action. Maybe tomorrow this zone might be violated, this particular zone. Okay, this is about the high liquidity zones generated from the previous report. Unfortunately, we didn't get, even though the number of HLQ zones are very good number of zones, unfortunate it is. I think this is the first time we have seen having 10 high liquidity zones, but we did not get a trade. Generally it happens. If 10 high liquidity zones are there, we get at least 3 or 4 zones, we get trades, trade opportunities. But today, something wrong in the market. But anyway, we have to accept. But at least this analysis will be helpful to you, how we are fine tuning these zones, especially those who are learning. Okay, let me take a break and then we all meet again in our next video. Thank you.